Brings us to our talk of the tape today. Does the risk-on sentiment of November bode well for the duration of the holidays given seasonal forces, or is there too much optimism at play that leaves the market vulnerable to even the tiniest bit of disappointment? For that, let's ask Dan Greenhaus of Solus Alternative Asset Management. Dan, thanks for being here.
No,
and
happy
Thanksgiving.
Same to you.
So does this risk-on sentiment have staying power? Are you expecting to see the seasonal forces, the traditional seasonal forces, play out?
Yeah, listen, I think so. It's been a really strong rally off the October 27th low, call it 10+%, in just a couple of weeks. Before we came on, I took a look back over the last couple of decades. This has only happened a couple of times, and you might think after such a strong rally over a short period of time, the market might be in for some period of digestion or a pullback, and historically that's not the case. When you look out 1, 3, 6 months, by the time you get out 6 months, after this type of a move, the market's usually up 330 basis points more than your average occurrence. And so usually this is followed up by stronger performance, and I think going into the end of the year, that's probably going to be the case this time.
So the driver of that is momentum. What happens if yields start to go the other direction?
Yeah, listen, certainly if things go bad, then the market will go down, and if things are good, then the market will go up. But when you look at the breadth of the participation off the low, virtually the entire market is up. When you look through the list of 52-week highs, in tech, we know that obviously Amazon and Microsoft are at highs, but so is ServiceNow, so is Adobe, so is Avago. When you leave tech, you can go to industrials. You've got GE, you've got Trane Technologies in the consumer space, Chipotle, some of the hotels like Hilton and Marriott. There's really broad participation. And as I think about all these stocks at highs and sectors at highs, I'm reminded of the famed investment guru Taylor Swift, who once remarked, I have no problem staring in the sun, but I won't look in the mirror. Or I'm old, I screwed it up. But as I say that, I mean it's easy to lament the strong performance of the Magnificent Seven, so to speak, in terms of one's underperformance or inability to outperform. But when you broaden out from that space, there are investable themes and stocks that are doing very well, and that theme and that trend is unlikely to change simply because the calendar does.
So basically no bad blood for the Magnificent Seven.
Look, are we going to go back and forth?
Taylor Swift.
I have every album since like the third, so I can do this.
I definitely pegged you as a Swiftie as you sat down next to me. Speaking of having every album and in purchasing and consumerism, today, of course, is Black Friday.
Sure.
How important do you think that is, and this holiday shopping season is, for the remainder of the year in terms of this breadth in equities and overall sentiment? Because there is expected to be somewhat of a slowdown in growth relative to the last few years where we saw so much stimulus overhang from the pandemic. Do you think that impacts just overall investor sentiment at all, or as long as things aren't too bad, then it won't have as much?
Yeah, no, at the end of the day, I think as long as it's not too bad, because I think the narrative is correctly the job market's holding up, real wages are positive a little bit-ish, and ultimately that's going to support consumer spending. But listen, we know, we just heard from a whole bunch of retailers that to varying degrees told us something of the same story, which is that the consumer on balance is still strong, although there's evidence of a slowdown as the quarter progressed. And that was true from the beginning of the retail reporting season to the end. And again, to your question, I don't see any reason to think there's going to be some meaningful miss in terms of expectations for the quarter. Again, the labor market remains strong. The stock market is bouncing. This is all good for confidence and for spending. And again, as the calendar turns, just because you switch from December to January doesn't mean any of those themes are going to change.